Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, folks. Thanks for joining me this morning. It is Wednesday, the 4th of February, 2026. Quick mic check, please. Let me know how I'm coming across to you. This morning, really, what are the themes for today? Just to go over the themes here real quick. It's really important to understand where the market's at versus the technical picture. The markets really are going through a bunch of rotations, technology, metals being the key pieces here. Equities are showing signs of stability this morning after a significant sell-off in software and data stocks. Nasdaq futures remain under pressure. We're seeing the NQ. We'll look at the relative indications sheet here or the table. It shows the Nasdaq off by about 34 basis points. The S&P 500's holding steady. It's up about 8 basis points, basically unchanged for the session. We had ADP this morning. ADP, if you don't know, came out at 8:15 a.m. Eastern. ADP is a payroll processing. It's the largest payroll processing company in the U.S., and it acts as an approximation for non-farm payrolls or the condition of employment here in the U.S. And the consensus on ADP was 48,000, came in at 22,000. The prior is 37,000, so it missed by quite a bit. Ahead of us, we have ISM Services PMI. This could be a mover, expecting 53.5. And then later on, we're getting crude oil inventories, EIA crude oil stock inventories, looking for a draw of 2 million, and then Fed Cook later on. I invite you to make sure you're following on Twitter. You're following Convergent Trading. You can find that at x.com/conv trading. Every morning, we're putting out a sheet that summarizes the market and tells you what the overall conditions are. So that's where that is. Gold has reclaimed the 5,000 level. Crude oil's pricing and renewed geopolitical risk premium. Crude was up for a little bit. Now it is down 25 basis points. And that's the big picture. Okay. Let's dig into what we've got. Hang on. Let's set this up properly. So we'll start out with our relative indications sheet. There it is. This morning we have the indices really not getting all that much participation so far. 74% on relative range, and the volume's in line. So the market's just in a holding pattern. Again, ignore equities and ETFs as they have not opened yet, so that doesn't update properly yet. You know, it's showing these ETFs are over 125% are blue. It's not really true. Currencies are resting. If you recall, for the last couple of weeks, currencies, metals, energies have been really, really active. And this morning they are kind of holding steady. You could see the dollar index, the DX futures are at 69% of relative range and 45% relative volume. So pretty light there, light across the euro, the cable, the franc, the Canadian is okay. It's got 99% of relative range, and the Australian, which has been an interesting trade to watch. You should check that out. The 6A futures, or M6A in the futures, has been off today as well. Bitcoin has taken a shellacking again, has dropped from about $95 to $75. And ETH, even worse. ETH down again 4%. Seems like they're diversifying away from crypto right now. And as I said, crude has come off. It was just down 25 basis points, and now it's down 41 basis points. It's opening in about a minute and a half. And then that brings us back to the metals, which are at 132% on gold for range, 76% on volume. The metals are up 3% for gold. Silver, very, very, very volatile. Remember, silver has always been more of an industrial metal than a store of value. And now its role has changed. Maybe for the foreseeable future, it's extremely volatile. We've had 25% off days in silver last Friday. I think it was Friday, and it's been popping a little bit higher. It's back over $90. $90 currently. Copper is holding steady. Copper, definitely an industrial product there. Copper has the distinction of being somewhat of a forecaster for manufacturing and consumption. Let's take a look in our review segment here. Let me move to the recap screen. This is where this is what we talked about on Friday. Friday, we had bounced off of this key protection zone down below in the S&P, extending from about 68.65 to about 6,900. I know it's a thick zone, but it's kind of played over and over, and I'll show you on the chart in a bit. This is the YouTube video here, replay of Monday. No show on Tuesday. I wish I could do it every day, but it's a little bit too much for me to handle right now with everything else that's going on. We dipped in there in the overnight session on Friday, and we rallied, and the primary expectation is that we would push through the LIS, but most likely because we're holding this value here in the 69.60 range, I expected it to, with high probability, to take out at least settlement for that session at 69.65. Friday settlement, playing on that 70 to 73% historical probability, and to rally based on the fact that it had put in a low and has rallied in the overnight session. So I was expecting a continuation as a high probability and the key play for the day. That's the main play that I discussed on Monday. Here's what actually happened. So this brings us back to where we were. This is the buyer protection zone. Again, from that session, in fact, that buyer protection zone has been in play for some time, right? Since the beginning of the year, that buyer protection zone has been in play. And what we did is we pushed through what was the LIS up here. And notice the LIS hasn't really changed. It's over here now. We pushed through the LIS pretty aggressively, took out the prior settle, pushed through, and formed a P-shaped profile on Monday. And then the overnight session was very poor on Tuesday morning. We came in, and I think we were like in the upper 40s or 50% for relative range on the S&P. It was in a holding pattern. And then since the open, it put in an open auction in range, tested up to the 17, and then took out the overnight low for our overnight stat, and then it started to push lower. And notice what it did here. Notice this. Quite a few collisions in the zone here. Again, this was the LIS. Here's the image from the prior session. See that? It's the same range for that LIS is carried forward today. Not sure why this keeps running off here. Is carried forward today, and it just exploded to the downside, had a lot of action right there, a lot of collisions. Very important to note, the LIS is not just a price action thing. It is incorporating the kind of activity that we had in that region, and then it could not hold it and it fell through. What did it do? Yesterday came right back to the buyer protection zone, and we've bounced back into the LIS again. So we are just beep bopping back and forth in this zone right here, and we find ourselves this morning retesting the composite point of control, which is right there, the white line. We're holding steady on this composite point of control, which was also last week's close, which was also last month's close, and we're just kind of whipsawing around. There is actually a seller protection zone that's formed up here, but I don't want to record it yet, depending on how it treats this buyer protection zone. I don't like having a seller and a buyer protection zone on the chart. It creates some sort of, it creates a bit of a discord. So I want to see the buyer protection zone give in, and then the seller protection zone is put in place. So this morning, what are we expecting here? I'm sure you don't need to look at me on camera, so I won't switch back. Better to see the full screen, right? Wouldn't you agree, to see the chart filling the screen like this instead of my mug? So this morning, what we have is an overnight low that's only about 10 points away, which is about a rotation. And then the overnight high is from where we are is about 20 points away, and we are fiddling around with the DGPs. So we have VWAP, full session VWAP, full session mid on top of each other, and what else is there? The overnight point of control. The overnight point of control and the full session mid, full session VWAP are overlapping, coming into the area of the MC point of control. Okay, what does this spell to you? For those of you who've been around a while, tell me, what do you think I'm going to say next in terms of our preparation and our perspective and bias of the market at the open? What does that tell us is the higher probability outcome given the way this thing is stacking? What do you think? I'll give you the 10 seconds or however long. Sometimes it's even longer. I think it's like 20 seconds to catch up. All right. I can't wait very long, but we are expecting, you know, an EKG chart, we'll call it. We're expecting zippers and so on and so forth. And guess what? Even though we're expecting zippers and all that, it is actually great when that doesn't happen. Remember the Monty Hall problem. For those of you who've been following for years, I've talked about the Monty Hall problem. If we expect balance and we get a market that just rips down, this is opportunity. Remember, we're not here as traders to be right. We don't get paid to be right. Believe it or not, despite what your favorite influencer is telling you, as a professional trader, I could tell you unequivocally that I'm not interested in being right. I'm interested in being aligned with the market, right or wrong. And so, although I expect this thing to chop around on the open, now remember when we're in a high volatility environment, especially during the RTH session, the volatility used to be in the overnight session, but now it's in RTH. It continues through RTH. And if we come in and it just rips down or rips up, this is great information. It tells us that we're not dealing with balance. We know that the energy is here to provide for a balance to imbalance break. Well, we don't have all that great energy because the volume's not so great this morning, but it tells us that we're moving from balance overnight to imbalance in the RTH session, and it sets us up for inside-out trading or trend following or imbalance trading, whatever term you want to use, and that's what we're looking for. But so far, the LIS is above us. We are stuck in the overnight DGPs, day-generated prices, and we're stuck on the overnight point of control. So to me, this is likely to chop around on the open. I'm expecting and suspecting that the balance here is likely to tilt, and I'm expecting it to tilt to the downside. Why? We tested this buyer protection zone. We rallied really well on Monday, and we sold off really well yesterday. The most recent auction is telling us that buyers could not maintain this balance up here. You know, we formed balance up here and it cannot maintain it. That's a fact. And if it cannot maintain it and it's breaking through the MCV to the downside, then we are likely to recheck the extreme on the other side. That's the market mechanism. That's the auction mechanism. So the expectation is if it does not get through the LIS, as long as it does not take out the LIS, I'm expecting this zone to be retested. And that's my primary scenario this morning. Does that contradict what you expected? Did you have an expectation? Do you have a plan coming into the day? If it contradicts your expectation, it's fine. Hold on to your expectation. Let's see what the market says. The secondary scenario, we drift downwards, test the overnight low, and then the buyers that came in on the close yesterday see this as a bargain. They come back in. I would need to see an impulse over here to actually consider a long. And even if I do consider a long, it'll be a very tight stop and a short range target because of the MCV and key LIS above. Likely to get choppy. And once it clears, this is an opportunity to either add or reinitiate. And now we're looking for it to come back up and check the 70-10 zone. 70-10, the 70-10 zone becomes a key test area above, and that's your second scenario. Okay? So for those of you who are new, you might think, okay, cool, man. You told us that it's likely to be choppy, and then you drew a bunch of lines to tell us it might sell off, and you drew other lines to tell us we might rally. Well, you've got all your bases covered, so you can't be wrong. Again, I'm not here to be wrong. I'm here to have a plan. My goal is to have a plan. I don't enter the battlefield without a plan. And my other goal, once I have a plan and I know what my price zones are, my other goal is to wait to see if I can remove a card off the table. There are 3 cards. I know you've heard this. Many of you have heard this before and probably don't want to hear it again, but at all times, think of this as a game of 3 cups. You know, you remember that game with 3 cups? They put the dice underneath or a marble underneath, and they shift the cups around, and you have to guess where the item is. I kind of start in that method. I don't shift anything around, though. I just put a buy card, a sit on hands card, SOH, and a sell card. And for me to buy, I don't wait for a strong buy signal. I'm looking to remove the sell card to get long, structured long. If I'm looking to sell, I need to be able to remove. I need to have definitive facts that tell me that the buy card has to come off the table. If the buy card and the sell card are on the table and I don't have enough reason to take them off the table, I don't trade. I sit on my hands. I don't have an edge, right? Because once you put the trade on, you don't want to sit here and go, well, I'm long, but man, I can make an argument for a short too. Oh, look at that offer up there just above, just a few points above. It looks like they want to sell it. That's the kind of nonsense that causes traders to second guess their decision and to over manage a trade and exit perfectly good trades, and then that snowballs into discipline issues and so on and so forth. So I want to come in knowing that I've eliminated the buy card in order to sell, or the sell card in order to buy. This is a concept that you might adopt, and my guess is it would change the way you look at the markets. If you cannot make a definitive argument for removing one of those cards, then you should be sitting on your hands. You should be patient until you get such information. What does that information look like? It comes in many forms. We cover this in the accelerator course on convergent trading, teach you how to read the auction, teach you how to detect these things. Things like reversals like this, spikes that reverse, failed retests, liquidity checks that reverse, short squeezes. These are all indications that the auction has stalled for that side of the market, and it's likely to push the other way, and we're looking to jump on those trades. Does this all make sense to you? Hopefully it does. It's quite simple, but these simple concepts have kept me have kept me in the business for very long. I've been doing this for 25 years, and I've been trading independently since 2003 when I started my prop shop, okay, here in Chicago. So looking at the auction, looking at this approach has kept me in business for this long, and I don't have to change. I don't have to adjust my moving averages. I don't have to adjust to the new software indicator. I don't have to find another guru who makes money or purports to make money. I've been trading this exact same way since 2005, 2006, when I moved from being a high volume scalper to trading based on the auction and auction structure. And you know what has happened since 2005, 2006? You had the 2008, 2007 through 2009 great correction, or whatever they call it, when the market fell 40%. You had COVID. You had the stagnation in 2016, 2018, then COVID, and then since COVID, you have this tariff nonsense, this administration, this destabilizing administration, and so on. It's all the same. The only thing I'm adjusting is the rotations, the size of my stop versus my targets, and so on and so forth. And that's really rotation-based, volatility-based adjustments, so that I'm not, putting in 6 tick stops when the market's demanding 30. So that's the main adjustment that I'm making. The rest of it's just the same. I cannot think of a more stable way to trade. Now, as the disclaimer said, futures are not suitable for all investors. This is just my opinion. This may or may not work for you. I'll leave you with that. I know I only covered the ES today and talked too long, but the NQ is looking the same way. The NQ tested the LIS I drew last night. It came up to 25,514 and has come off. The NQ looks a lot more like it wants to recheck this low than it wants to go higher. The prediction on the NQ last time was that it is likely to be a drag, and it ended up popping higher, so that was incorrect, and that's fine. It's okay to be wrong. Remember, our goal here is not to be right or wrong. Our goal is to align with the market. Let it slap us when we're wrong. I'm good with that. As long as I can align with it, then in the long run, I expect to see a return on my effort. Gold has been messing around with this LIS since way back from the 23rd. It's just been kind of playing with this. I have not been able to move this line in the sand for gold. It's kind of the dividing line, which happens to coincide with the 5,000, but the LIS is based on how the auction is progressing, how the volume's trading in those areas, as well as price structure. So it's, the gold is looking a little bit bullish. 5,300's likely the next target. Crude has fallen off has done a good job of testing that 66 handle and has fallen off. And then yesterday, it held the LIS that was here since Sunday night, has held it. You can see it traded quite a bit, a lot of collisions in this zone. You look at this volume, just a lot went on, and it fell right back in. So it remains the LIS for the session, and we find ourselves trading inside of the LIS. I'm keeping my hands away from crude in the time being. This is a dangerous area to trade here at around the 63 handle if you're a crude trader. I'll leave you with that. Good luck. Don't forget to hit the subscribe button on your YouTube channel. It's free, and it'll notify you when I announce the next live TraderBite. Good luck, and hopefully you learned something today. Cheers.